Did you know that the vast majority of people who start trading never become consistently profitable? You've probably heard the statistic that 95% of traders fail. Whether exactly 95% or not, one thing is true. Most people who get into trading never stick with it long enough to become successful. The interesting part is, it's usually not because they're not smart enough, it's because they keep making the same mistakes over and over. I, Flash, have been trading futures for the last couple of years, and I've made every one of those mistakes over and over again. Some of them cost me money, a lot of them cost me money, and some of them cost me months of progress. So today, I'm going to show you the 5 biggest mistakes traders make, and more importantly, how you can avoid them. So let's get into it. Every trader eventually reaches a fork in the road. One path leads to frustration, blown accounts, and quitting. We've been there. I've done that. I've got the t-shirt. The other leads to discipline, consistency, and long-term improvement. The difference isn't luck, everybody. It's the habits that you build. These are the 5 mistakes I wish someone had explained to me when I first started. If you can fix even one of these mistakes today, you've already been moving in the right direction. So let's start with the biggest one. Mistake number 1, risk management. The biggest mistake new traders make isn't using the wrong indicator. It isn't picking the wrong market. It's risking too much money. When I first started trading, I was focused on how much I can make. How much? Come on, bring it in. Instead, I need to be finding out how much I could lose. Every trade looked like the one that was going to change everything. But here's what I've learned. Every trader is wrong sometimes. The trader who lasts aren't the ones who never lose. They're the ones who keep their losses small. So let's say you start out with a $10,000 account, everybody. If you lose half of it, you're down to $5,000. That's 50% gone. Now here's the part that most don't understand. You don't need to get 50% made to recover it back to zero. You need 100% gain just to get back to where you started from. It's weird, ain't it? That's why protecting your capital is so important. Before I take any trade, I want these 3 questions answered, everybody. Where am I entering at? Where is my stop loss? And where's my profit target? If I don't know those answers before I click buy or sell, do not take the trade. So, I know I'm taking a loss isn't fun, but moving your stop because you're hoping the market comes back usually turns a small loss into a huge one. Small losses are part of trading. This is given. It's what you're paying to play the game, okay? Huge losses is usually a choice, and it is. Mistake number 2. Overtrading. Overtrading is almost something that every new trader. Overtrading is something that almost new traders struggle with. I did. I still struggle with it. You take one losing trade and immediately you feel like you have to make it back. Have to get that back. Instead of slowing down, you speed up. Just one more click. Buy, sell, buy, sell. You're no longer following a setup. You're reacting emotionally, everybody. That's why mistakes pile up. One sentence completely changed how I looked at trading. Professional traders get paid to wait. Think about it. The market isn't paying you for clicking the mouse. It's paying you to recognize high quality opportunities and having the patience to wait for them. A+ setups, everybody. A+. I'd rather take one great trade than 10 average ones. One quality setup can make your day and you're out. 10 forced trades usually lose your day. So mistake number 3, no trading plan. Imagine trying to build a house without a blueprint. That's exactly how many beginners trade. No entry rules, no exit rules, no consistency. I also made the mistake of believing more indicators meant better trades. My charts were full of RSI, MACD, Bollinger Bands, stochastics, you name it. It's the holy grail. I had to have it. Well, the problem wasn't the indicators. The problem was I didn't have a simple process I could follow over and over again and be disciplined. Today, my charts are much cleaner. Personally, I use VWAP and 2 moving averages, the EMA, the 20 and the 50. I have volume down there at the bottom, but I just kind of look at that. So simple doesn't mean easy. Simple means repeatable. Before every trade, I ask myself now, why am I entering it? Where's my stop loss? Where's my take profit? How much am I risking? Everybody should be doing that. The checklist that I have saved me countless bad trades. Mistake number 4. Here we go. Unrealistic expectations. So if you're on social media, if you're watching this, I'm sure beside this video on the recommended is how to turn $500 into $1,000. How I turned $100 into $1,000,000. And they're standing beside Lamborghinis, big mansions, and all that. They get views. They do. I've clicked on them. I've watched them. They don't show you the months of years of hard work behind the scenes. I tell you that. So it takes time. The reality is it's not that exciting, but much more sustainable. Trading takes time. Consistency wins. Small gains add up. The goal isn't to get rich overnight, everybody. The goal is to become consistently profitable. Consistently. Mistake number 5. This is you and me. Ignoring psychology. This is the mistake that catches almost everybody. It ain't your setup. I'm telling you that right now. Most trading setups and strategies work. It's the mistake that catches almost everybody. The fear makes you close winners too early. The greed makes you hold on to losers too long. The revenge trading makes you jump into bad setups just trying to get your money back. Overconfidence makes you risk too much after a winning streak. The market isn't the opponent. Your emotions are. Right here, your brain. The traders who last aren't the ones that have the fanciest indicators. They're the ones that stay disciplined. They follow their plan. They accept their losses. They think long term. Because at the end of the day, trading isn't about being right every single time. It's about making good decisions over and over. At the end of the day, it's the end of the day. So let's recap. Don't overtrade. Have a written plan. Set realistic expectations, okay? And most importantly, master your emotions. If you can just improve on one of these this week, hey, you're in the right step. You're in there. I mean, it's like a layup. You're there. If you enjoy this video and you want me to make more content about futures trading, prop firms, and becoming a more consistent trader, make sure to hit that like button, subscribe. Thank y'all for watching, and we'll see you in the next video. Flash is out.